All right, guys, I am back. I am back. Okay, 1 second, you guys. Let me put this up here. All right, so I am up. I know, I'm late to the game. I get it, I get it. Lots of people live stream right now, so I doubt that anyone would listen to me, but it's okay. Most of my viewers are listening later. Get it? Okay, so let's get the update. I'm sure most of you already know the news and all that stuff, so I'm not gonna kind of spend too much time on that. But for those of you who are new to this whole thing, of course, Warren Kitty just updated his YOLO update, right? And he had exercised most of his call. The speculation was that he sold a whole bunch of his call already, in fact, all of it, and exercise and added more shares to his position. So, in my opinion, this is pretty bullish in my kind of assessment on things. Of course, again, anything could happen, right? Again, the speculation is that these brokers has no shares of GME, but if they do, everything is covered. No harm, no foul. Somebody sold those calls to him, so whether it's retail um, or market maker, those shares has to, uh, I guess, settle, right? Now, that could cause a volume coming in from other retail investor or momentum traders or volatility traders who would want to take advantage of this, right? So again, the expected move is, of course, up on the upside, bullish for the company. Let alone the shareholder meeting was supposed to happen today, but for some reason, the crash, apparently there's some server issue, and people were like crashing the server. So they're gonna postpone it to Monday instead. Of course, like it's a speculation that we're gonna announce something amazing. Who knows? It could be a dud, right? I'm not expecting too much, right? Currently, I only going to assess the actual balance sheet itself, right? Because that's the only thing I could go by in terms of what is to come about this company. I hate speculation because, yesterday there's a lot of news coming in. Oh, Rowan Kitty sold. Of course, nobody thought that he would sell until, later on. But there must be a tide turn of event that, I think he doesn't want to risk owning the call option. Rather, he would much rather own shares. So the risk of owning shares is a lot less risky in terms of like long term, prospect of things. So I think that's why the decision is to exercise today. Um, Again, I mean, I think it's a smart thing to do, obviously. And if it's all about money, he would have exercised it way when it was, you know, $40, right? He would have been having at least 2 million more shares, perhaps, right? Or a lot more shares than that. But yeah, it's pretty much along the line of what I thought he would have done too, right? Um, but yeah, shout out to him. I think, owning close to double his position is pretty good. You know, nobody could own this much share if he's not knowledgeable of the market itself. I think. But anyway, just I think Rowan Kitty did the right thing here. Now, as far as like the expected move for tomorrow, there's a lot of technical analysis people who've covered this company already, the price action. I'm not gonna kind of attempt to even guess what's happening, but if you want to play call option, obviously the safest thing to do is to do a leap. In my opinion, obviously right now it's a lot more volatile, so you're gonna have to pay more for those contracts. But if there's a spike happening, right, you could earn, 3 times the amount that you put in. So again, this is why option is so attractive to a lot of people who just come here quickly and taking advantage of the momentum here. But as far as the company goes, the fact that they have raised a lot of cash already, I'm gonna just focusing on that. The fact that they have $10 per share in terms of book value instead, right? So, and it's rare to find, in my opinion, that you could buy a company. It's almost like you're buying GME at around $15 all over again, right? Because at $15, the book value was around 4 point something, 4 point dollars. Hold on, give me 1 second here. Okay. Sorry, you guys, I haven't been on here. Been busy. So of course my thesis is still the same. Still have my long-term moon back over here, and still have the same price targeting, right? This is more of an estimate. I didn't get the real number quite yet, but it's around this price point right here. The demand is so high that even diluting more of the shares give shareholder equity a bit more, increasing shareholder equity. So let's see if I look at this one right here. Right now, if you were to add these 4 quarters together right here, and this is why trailing 12 is so important to kind of look at the health, the trajectory of the company income, net income, okay? So I don't care what people are saying about the top line revenue too much, because that's not the most important thing. Because again, every time you want operating in the business, you want to look at what the income is. I don't care how much money you bring in. How much money do you get to keep at the end of the day should be the most important thing. And the fact that they get to keep more by earning less or have less revenue speak volume. What does it mean? It means that they've been over leveraging themselves, right? Old leadership I'm talking about here. So over leverage doesn't mean that it's always a good thing, right? And people is so antsy about how finding out what Ryan Cohen's going to do with this money, right? And that's been a very speculative things, of course. Like, I expect good things, right? For this company or for this leadership to do good things with this money, because there's a evidence-based, in my opinion, right? Well, it's not an opinion. Look, we've done dilution before, and when it was diluted over here, GME was able to pay off debt, right? Long-term debt right away, and even paying premium, okay? Paying premium to get out of debt. And my speculation based back then was because leadership understood that debt was not going to be a good thing for this company, because it's burdening, the company $50 million in interest payment, right? I think that's what it is. No, hold on. Interest payment over here, up here. Burden. Hold on. I think this is quarter. Sorry. So you would have had to pay a lot of interest in those. See, some quarters you're paying like $24 million per quarter. And if you were to add the 2 or the 4 quarter for the year, it adds up, every little thing adds up. And on top of that, if you have debt plus cash burn, it's going to exacerbate the demise of the company, right? So back then when we were diluting, we were doing everything we can to stop the bleeding, right? And so, of course, yeah, we did play a lot more. When I said we, I mean leadership. did play a little bit with the money, right? But at every turn, yes, shareholder equity was diminishing. But again, they were doing something with it. Now, the diminishing from here to here, I'm sure it's due to pay off debt, because those are $300 million worth of senior notes and all that stuff that was high interest. And there's no business having those open while you have cash. And so think about it. If leadership would have used this cash to expand more, it would have been breaking their back. They would have been bankrupt by now, or diluting more shareholder equity, and gain the reputation of Adam Aaron, right? But leadership never did that, never raised any equity until now, right? Yes, they do 2 times of shareholder dilution, so to speak. But again, each time they dilute, it gains more book value for shareholders. So if you are a shareholder, you have more equity per share than you used to have it. And again, it just means that the demand is just so high that even 25% dilution still yield shareholder equity a lot higher. And today it's kind of solidified the events, right? It's like people keep telling you that nobody wants to own this company, but everybody is here. It seems like they want a piece of this company for whatever reason, right? Now, of course, we don't know who bought those shares or anything like that. If it's institutional, they'll file it. But the most important point that I want to kind of reiterate a little bit here, I think people are paying attention too much to Roy and Kitty and not much attention to what leadership has been doing or will do in the future. I think it opens a lot of possibility for Ryan Cohen to get in as well. So his ownership right now is 8%. It used to be 12%. Now it's 8% ownership. And insider could buy more, possibly, to increase their percentage ownership. Think about the director. Larry Chang was buying at $11, remember? But he only used like a small amount of shares, $100,000 worth back then. Of course, now it's multiple of that. So just an example of, the bullishness of nature of this particular leadership. They are actually aligned with shareholder much more than any other company that I've noticed in the S&P 500, right? And so again, there's a lot of things that's happening in this company. I think, the fundamental is here. I know you've been told by the media that it's not here, but just to get a perspective from, of course, I'm biased, right? But if you look at the, I don't know if they updated now. I think Fintel. Let's look at Fintel real quick. Fintel, institutional ownership. Earnings update here. Okay, so here, let me show you something. Oh, I forgot to share that. Okay, so if you look at the update now, I showed this one before. It used to be like $5, right? Of course, like this is a recent development. Of course, this is them calculating the new dilution here, or the new cash raise from diluting into the float. And here's the kicker. Hey Carter, what's up? What's up? No, I haven't been on a couple days. I saw you were busy earlier. Appreciate you though. I'm just trying to show them this one. I don't know if anybody have shown this before, but it's kind of curious to me, right? That they still update it to like $9, and it's like a June 25. So why are they not updating June 25 here, or going further down? Price projection, and then the revenue projected to be increased by $2 billion in 2 years though. So I have to, in 2026, that gives, or give us $26 per share. I mean, I think that means something, right? As low as $5 to high as $14. So at least they give you a range, right? So the average is $14 right there. So it's rare for me to see a range rather than just what Bush is telling you. So yeah, it's worth taking a look at. So that's good. I mean, it's still low ball for me. I feel like this is saying that you could buy the whole company at $4, like the leadership, the brand, the customer loyalty, the the possibility of its growth, right? You can't put a price on that. So if you're saying that I could buy this company at $4 a share, that's ridiculous, right? It's just my opinion here. Okay, so let's take a look at market cap right here. And of course, we talk about, like, Marantz has been kind of like honing on this fact as well. The possibility of going into the S&P 500 is very near, right? I'm more conservative in the estimation. It could take us up to 2 years to do that. Because of the regulation, it seems like they are raising their bar ever so often, right? I just heard about this option rule. All of a sudden, it's like, oh, due to systemic event that happened, we might not exercise or deliver on time, or whatever the F, right? It seems like every time we're trying to catch these broker to do something kind of illegal, right? Of course, like, bona fide market maker have the ability to do that, but when they abuse it, it seems like there's a slap on the wrist. And when they abuse it so much so that the systemic error kind of come to play, they said, oh yeah, we have to do this because we want to protect everybody, right? Okay, well, why don't you protect them, protect publicly traded company before that happens? Why don't you protect them in another way where, okay, if you want to sell shares to somebody, why sell them naked, right? Or develop a risk tolerance where, okay, if you want to short the company, make sure you have at least 5 times your money. How about that? If you want to short GME at $5, for example, then you need $10 to cover that at all time. And if the trade goes against you, you're gonna get liquidated right away because of that cash that you have as a collateral to short your position. And so if they had that in place, none of this would have happened, right? These people would risk manage it a lot better. So if the risk of shorting something would break a system, then I think the restriction should be a lot better. Just my opinion, obviously, like based on my observation on sometimes these lawmakers. I just feel like, man, this is why, again, it's called a conflict of interest and eroding the integrity of the market, because you let these things going on forever, and the appearance of conflict of interest shouldn't be in the market at all, because you can't preserve the integrity of the market if this is just rampant, right? And every time you caught these people, they get bailed out. For what? For their stupidity? For their risk management issue? No, then you don't deserve to be up there. You don't deserve to be somehow, on TV, kind of promoting yourself, promoting other people who does that thing, right? Yeah, anyway, I'm just like on my soapbox here. Okay, let's go back to, I know everybody was looking at the option chain, so let's try to look at here. Now, tomorrow would be updated on the recent, the 21. Maybe look at that one. That's the most famous one. So the famous one is the 21 strike. I mean, the 20 strike price here. Call over here. Boom. Oh, doesn't even show. You know what? Let me go over here. It's probably better. Okay, so right here. So this is Rowan Kitty position. Now this did kind of like that speculation was actually true. I mean, of course, the news broke. It could be Rowan Kitty and all that stuff. So now it's not a speculation anymore. We knew exactly that some of this volume comes from him selling and exercise into the share, right? So the I didn't do the math myself, but it seems like he sold enough to get 4 million shares. So if that's the case, if you do $20 at 4 million shares, that would require $80 million. So $80 million, he need 80 million. If the option only give rise to, what is the price? I don't know. Again, like the price that he exercised at. How much he sold. Let me see. I think 80 contract, right? 80,000 contract. Wait, I think $100? No, that's not true. I think I'm doing the wrong. So he need $80 million to get 4 million shares. So subtract this much, 12 million. So he sold. Oh, I'm like stumble on my math here. Hold on, you guys. It's been a long day. Okay, so let's look at this real quick. So 4 million divided by $80 million. Sorry, that was $80 million. But how many contract is that? Okay, my brain just broke, you guys. I'm so sorry. So I'm gonna do the math later. I'm sure there's so many video out there. Okay, but okay, the speculation for me, of course, this is all speculation about the price action here. Of course, to me, this is bullish, right? So tomorrow, we have, sorry about the noise, background noise here. We have a lot of out of the money contracts. So the expectation is that these market maker, if it's sold naked, right, they would have to go out and buy those 4 million shares, assuming that no one else executed or exercised those call along the chain with, well, again, like this is just one person, right? So we have to assume that none of these people have exercised at all. But if all of these people are exercising or in the money, we want shares instead of the call option, then this would create the gamma ram that will bring all of these call option for tomorrow in the money as well. So the premium is going to be so high for tomorrow. Just look at, just look out for that. Again, not telling you to buy, sell, call, or anything like that. It's just an expectation that I have for tomorrow. Of course, I'm gonna grab some more shares. I just got some fun from today because I got paid yesterday. So now it's ready to go. So I'm gonna grab some more for my own. I might just buy sell cash secure put at 28 just to get that premium. I know I should buy straight up shares, but I'm thinking, well, I have enough shares for quite some time, so I kind of wanted to play it safe a little bit just in case, right? The price action will come down before the earnings, right? And again, I mean, with this company also, the history of earnings, uh, I'm not saying the earning is disappointing, but anytime there's earnings happening, they would usually smack the price down, you know, um, to again, elicit this emotional response to like, oh, this company is crap, right? Oh, leadership doesn't do anything. Oh, Ryan Cohen didn't say anything worthwhile. It's like, what, they buy this company? Ah, it's shit company anyway, right? So any type of negative sentiment, you're gonna hear all about it. Okay, I think that's all I have, you guys. I'm so sorry today. It's been uh quite a whirlwind, but yeah, my brain is just not kind of receptive of any any math right now. But yeah, so I'll be back. I don't know when. Hopefully tomorrow, maybe. But yeah, you have a nice day, and I will see you when I see you. Okay.